Everyone talks about their opinions online. But what happens when you have to bet real money on being right? I tested this theory out myself. I put money on whether Zoran would win the mayoral election, if Yannick Sinner would win Wimbledon, and even how much Superman would make on opening weekend. You might have heard about this concept during the last presidential election. It's called a prediction market. And the platform I used is called Polymarket, where you can literally trade shares in the outcome of future events. As someone who works in finance and loves anything that blends strategy and uncertainty, like investing, poker, or even sports betting, I wanted to run an experiment. Can I actually make money by betting on the future? So in this video, I'll break down how Polymarket works, share my experience using it and advice on being successful, and explore why prediction markets might completely change how we think about information, probabilities, and truth. Polymarket is a decentralized prediction market built on blockchain. Now, in plain English, it's a website where people can bet on whether or not things will happen. Now, you'll see markets like New York City mayoral election, Fed decision in July, Israel and Hamas ceasefire by July 15th. Each outcome has a yes and no side, and people buy shares in those outcomes. If you think something will happen, you buy yes shares. If you're right, they pay out $1. Now, if you're wrong, you get nothing. It's like a stock market, but instead of trading companies, you're trading beliefs about the future. Prices move based on supply and demand. So if 70% of people believe something will happen, the yes shares might trade at 70 cents. If new info comes out, like a news story or insider leak, prices can shift instantly. And because it's on the blockchain, it's technically global and permissionless. No government approval, no central bank, just users and a smart contract. But that also makes things a little bit messy. Now, the idea behind prediction markets isn't new. They've been around in some form for centuries. In 16th century Italy, traders bet on the outcome of papal elections. In 19th century New York, there were betting pools on presidential races published in newspapers. But the modern version of prediction markets were first formalized in academia, as a way to test the wisdom of crowds. Now, the idea is simple. If you get enough people with diverse knowledge, incentives, and risk tolerance, the average of their beliefs can be surprisingly accurate. In fact, the Iowa electronic markets, one of the earliest modern prediction markets, often outperformed political polls when it came to forecasting US elections. Now, since then, platforms like PredictIt and now Polymarket have tried to take that idea to the masses. Okay, so how does it even work? Every market on Polymarket reflects a real-time probability. A yes trading at 62 cents implies a 62% chance that the event happening. If you buy at 62 and win, you get $1 per share, making a profit of 38 cents. Now, if you lose the 62 cents you paid. So, in that sense, prediction markets are probability markets. But here's the twist. Unlike sports betting, which usually has set odds, Polymarket odds are fluid. They change based on buying and selling, like a stock. Now, what this does is create opportunities for speculation, where you can buy low, sell high, even before the event has been decided. Or arbitrage, smart mispricings and profit from market inefficiencies. And hedging. If you're an investor, you might want to hedge risk, like betting on a recession if your portfolio is vulnerable. Now, it also means that timing really matters. If you enter a market early, when the odds are low, and you have info that the market hasn't priced in yet, you can earn outsized returns. Now, of course, the opposite is true. Jump in late, and you might be left holding the bag. Now, one of the most fascinating things about Polymarket isn't the money. It's the mindset shift. Now, when you bet on something, you're forced to clarify your beliefs. You can't just say, it's likely that Biden drops out. You actually have to decide, is it worth 20 cents, 40 cents, 80 cents? Prediction markets make you put a number on your confidence. And that's actually really hard. We're all subject to cognitive biases, whether from confirmation bias, where we seek that info that supports what we already believe in, or overconfidence, thinking we're right more than we actually are, and even anchoring, getting stuck on initial prices or narratives. But when money's on the line, those biases get tested fast. That's what makes Polymarket different from Twitter arguments or cable news. You can't bluff the market. You either win or you lose. So in that sense, it's not just a tool for forecasting, it's a tool for thinking better. I think the bigger question is, should we even be betting on things like elections, or pandemics, or even war? Is it ethical to profit off of potential catastrophe? Now, some say yes, because when you put a price on future outcomes, you force people to think clearly, and sometimes that clarity helps avoid the worst case scenario. Now, others also argue no, that it opens up the door to dangerous incentives. Could someone manipulate an outcome just to profit? What if there's a market on whether something awful happens, and someone decides to actually make it happen? Polymarket bans markets on death, but what about ones that feel just as dark? It's a pretty slippery slope, but just like any powerful tool, it all comes down to how we use it. Alright, so after diving into the theory behind prediction markets, I figured the best way to really understand how they work was to put a little skin in the game. So I ran a fun little experiment. I funded my wallet with just over 1,000 in USDC, used a VPN, and started placing bets across a bunch of different markets on Polymarket. Now, I started with something that felt very familiar: sports betting. Major League Baseball was the only US sport running at the time, so I threw out a couple $50 bets to test the waters. And let's just say, not a great start. Lost both right out of the gate, so down $100 right off the bat. Still, I stuck with MLB for a while, made around 20 bets total, and after all the sweating, stat checking, lineup changes, and late night refreshes, I ended up basically even. All that effort for no real return. So I pivoted. I asked myself, where do I actually have an advantage? I started targeting markets where I felt I could read between the lines a little bit better. F1, Wimbledon, even some macro stuff like the Fed decision in July. F1 was fun. I bet on Lando Norris to win the British Grand Prix, and he cashed. In tennis, I found solid returns betting favorites in 5-set matches. Statistically, the better player wins more often in long formats. And that was working. Until it didn't. I decided to play my luck with the women's bracket, and I had money on Sabalenka in the semifinals. She dropped a break in the final set, down 1-4. I was watching it live and knew she wasn't coming back, so I sold out mid-match, took around a 50% loss, but avoided the full burn. Then came the Fed decision. Odds were pricing in around 80% chance of no rate cut. And after reviewing Jerome Powell's recent comments, it felt pretty obvious that the Fed wasn't gonna flip on a dime. It was a pretty boring bet, but it felt like free money. And it hasn't cashed yet, but it's now at around 95% odds of no change. So where did I land after around 3 weeks of betting? Now, as you can see, I ended up with just a little over $100. Not exactly life-changing returns, but enough to say I held my own. And honestly, the money wasn't the most interesting part. It was how much more engaged I became with the news, the markets, and my own decision making. But let's be real, it wasn't all smooth sailing. So here are some lessons learned and advice I'd give to anyone thinking of jumping in. Only bet when you have an edge, and know why. Not just a gut feeling, not just this looks good. Actually ask yourself, what do I know that the market might not? Why is this price wrong? What evidence do I have that others don't? Now, the best bets aren't always the ones that feel exciting. They're the ones that feel obvious to you and misunderstood by everyone else. No is just as powerful as yes. Most people default to betting for something to happen, but often the smarter bet is on something not happening. For example, don't bet on a moonshot to hit. Bet against it hitting. Saying no to something unlikely can often give you higher conviction and a better chance at long-term gains. Think in terms of expected value. Every bet is a trade-off between risk and reward. You have to ask, what is the probability this hits? What do I risk losing? Game Theory 101. Sometimes the boring bets, like the Fed staying put, offers the highest EV. You're not looking for lottery tickets. You're looking for mispriced risk. Selling at a loss is often the smartest move. This was honestly hard to accept at first. But if new information comes in and your original thesis breaks, cut the losses early. Don't write it to zero out of pride. I sold out of Sabalenka mid-match and it hurt, but I lived on to bet another day. Capital preservation matters more than being right. Lock in gains if you have low conviction. Sometimes your bet's up 20, 30% and you think, should I let it ride? But if you don't believe in the outcome anymore, cash out. Roll that bet into where your conviction is higher. You're not trying to win every lottery. You're trying to build a consistent edge. Fewer, smarter bets beat spray and pray. Early on, I was making tons of small bets across many different markets. But it stretched my attention and my capital way too thin. I shifted to making fewer, higher conviction plays. The kind I wanted to monitor, research, and believe in. And surprise, my win rate went up. My stress went down. Less is more. Quality over quantity. So after nearly a month of betting on the future, it's time to reflect on what I've learned. The first is that prediction markets force precision. Now, we're all used to sharing opinions. I think this will happen. But when money's actually on the line, vague doesn't cut it. You have to assign a probability. You have to ask, what odds would I take? When would I sell? That mindset shift forces you to be sharper. You start second guessing your assumptions. And you ask better questions. And over time, your thinking just becomes a little bit more clear. Second, the market reflects belief, not truth. Polymarket feels smart. It reacts fast and often mirrors public sentiment. But it's not always right. Prices show what most people think, not what's actually going to happen. And the crowd actually gets it wrong. A lot. Bias, hype, and emotion creep in. I saw overvalued favorites collapse and long shots quietly cash. Success here doesn't come with following the market. It comes from seeing where it's wrong. And third, it changes how you consume information. This is the one that surprised me the most. When you have money on an outcome, you engage with news totally differently. You don't just scroll, you evaluate. Is this real? Is it already priced in? Is it signal or noise? Betting made me more curious, more skeptical, and more analytical. Not just about the market, but about the entire world. So is Polymarket just a niche crypto toy? Or is this a preview of how we'll think, forecast, and act in the future? Honestly, maybe both. It's early and messy, and it's definitely not perfect. But the core idea that we get to trade beliefs, crowdsource probabilities, and see what people truly think will happen, that's big. In a world drowning in noise, prediction markets give us something else. A price, a probability, a signal. And if you want to know what people really believe, don't just ask them. Watch what they're willing to bet on.